Today we are discussing two of South Africa's largest asset managers, Investec and Coronation, and we are about to explore their financial services. However, Paul, you were in trouble the last time we discussed Coronation and I think the asset managers in general.
Yes, we were discussing them in general.
Just before we go any further, Johan du Plessis out there must be waiting for your apology. You promised you would make it, so let's see what you've got to say.
No, it wasn't so much that. It was, we were talking about institutional pension funds and retirement organizations. And I was saying those people are idiots, all of them.
Which made him very, very
because
angry.
They give money to these kinds of professional asset managers and give them performance fees and so on and so forth, when in fact, what could be harder than buying an ETF if you're sitting? And he sent me an inflammatory email saying that I was the worst person he'd ever heard on television, and that here I was making it sound as though they pay 3, 4, 5%. What he was pointing out is they don't pay anything like that. They pay much lower fees, and they only pay performance fees if they beat the benchmarks like the Stoxx and so on. And then those performance fees are, fairly modest.
So are you saying sorry?
Yes, definitely, as far as that's concerned. Although, if you start looking at the amount of numbers...
Should we not stop there while we're ahead? I think let's talk about the financial services of these business. Gerbrand, jump in. He said sorry.
On the valuation side, you're looking at about a 20p. You still get a decent dividend yield of about 5.5%, 6% on Coronation. If you look at the numbers yesterday, it's just you could have bought this company at R6 a share in 2008 and at a P of about 6, 7, when nobody actually liked the Coronation guys out there with their models not working so nicely at that stage. You're paying a bit up at the moment, and I think you're paying more expensive than what you would for the normal market. So we tend to shy away, although we think it's a brilliant run company. It's been beating everybody's expectations over the last 2-3 years. Some of these fund managers that work there actually wanted at one stage not their performance fees paid out to shares anymore, but into their global fund. So that was about 2 years back, and that was at R30 a share. So
financial services.
Yes, on that score, there's another piece of the Investec business that I think we must discuss, and that is the private client wealth and lending and stockbroking type of thing. So leave aside the institutional asset management. There's another sort of 35 billion pounds, which I guess is about 500 billion rand, and that's individuals who have money with Investec. Now, some of them are very wealthy business entrepreneurs who own their own businesses, that own enormous stakes in their own listed companies. I could name some examples. Some of them are just, wealthy people, and that's both in the UK and here and in Australia. They sort of mix the lending to those people in there, and recently that's been the source of a lot of trouble, because we know there were some spectacular cases of entrepreneurs here, there, and everywhere that left them high and dry, and they had to take big losses and impairments. But that is intrinsically a potentially very valuable business, and another part of the Investec universe that needs to start kicking in some profits.
If you look at the banking space, you normally value these things at a price to book ratio. So you buy Investec, the banking division, or you buy the whole business at a price to book of 1. So you actually, on top of that, you get the asset management for free at the moment if you compare it the likes of your standard banks, your net banks in the local market. So that's why we like it. And certainly they had depressed earnings in all of these other markets that they were operating in. And we think if those do turn around as well, you certainly, although you're getting a 4% dividend yield at the moment, waiting for that, you certainly are going to get a nice upside on your models on Investec.
But Gerbrand, I don't know, what do I know? But there's the share price chart of Investec over 5 years. And when they put out their trading updates prior to going to their closed period, they still talk about 1% increase in earnings here and there. There's never any excitement. So what's going to take that share price from 70 Rand to 150?
I can answer that. A re-rating of the entire banking sector
in Europe and UK.
In Europe and the UK. There we go.
Yeah, the trouble, of course, in the UK.
You're offering me a job.
The trouble in the UK, where they operate and are seen now as a sort of a second-tier type of player, is that it's just like the battlefield after the War of the Crimea. There's Lloyd's, TSB, there's Royal Bank of Scotland, there's corpses
having said
everywhere.
that, we have got to, investigate how long it's going to take for the European and the UK banking sector to recover. And perhaps that's the better question to ask here.
I just think there's a lot of working through their GDP trends in the UK and in Europe more generally, still not good. So I think it's going to be still a long time, maybe 3 years before it wakes up.
Are you more optimistic, Gerbrand?
Now look, we can take a 3-5 year view. We got into this about 50 Rand a share, I don't know where, a year or two back. We're happy with the growth we had out of it for the last 2 years. We still think there's much more upside, but there's much more margin of safety on this play than there would be on a Coronation. If they start having problems on some of their mandates, etc., then you're certainly going to have much more downside than you would on an Investec.